afternoon and happy Friday, everyone. Welcome to Stock Market Today. Ali Corman, Ed Carson here with a breakdown of the action this week and a look at the week ahead with that big earnings week coming up. Ed, what do you have for us?
Well, a couple of stocks that are nearby points that have earnings next week, Google and Upwork, along with a stock that really performed well today, Cleveland-Cliffs.
Okay, we'll take a look at those first. Let's take a look at the major indexes on Thinkorswim. Here's the NASDAQ composite. We have our candlesticks chart here, Ed. So we do have a red bar today with the NASDAQ down 0.8%. The S&P 500 down just 0.1%. The Russell 2000 down about 0.3%. The Dow on the upside, up 0.2%. But even with an 0.8% loss today, Ed, the NASDAQ still had a very strong week.
Yeah, it did. I mean, and even like we closed off high, off lows, you can sort of see that closed sort of in that fatter part was in that area. It wasn't that big when you think about it. We still have what was more than 1% for the week. Monday, we sort of really powered from the 50-day line. We had gotten above it, but then we, just sort of decisively cleared it. None of that is broken. The Dow and S&P hit record highs this week. It's definitely a positive look to the market heading into peak earnings week. I mean, that can change quickly, but right now, the major indexes and leading stocks look pretty good.
Sure. And not all too surprising to see a little bit of a pause here. And it would actually be constructive, right? To see a little bit of a pause after two strong weeks back to back.
Yeah, I mean, because you could argue that we were sort of due for a pullback. And so it's nice to see that. There's a lot of stocks that are at or near record highs, maybe traditional buy points. If they could, form handles or some kind of consolidation, they might offer new opportunities to get into these stocks. So yeah, I think this is healthy action so far.
Okay, and a quick look at the weekly chart to put things in perspective here. So we now have 3 blue bars in a row here, Ed, and not all too far from all-time highs.
Yeah, this is looking pretty good, and breaking the downtrend. We're back on track, so everything's looking pretty good.
Okay, and now flipping on over to MarketSmith to take a look at the S&P 500. So speaking of all-time highs, the S&P closing this week right at them.
Yeah, I mean, it looks great. And, this is also just looking at this is the broad-based index and it's at record highs. So we usually talk about we're growth investors and stuff, but there's actually a lot of sectors that are doing well. I mean, plenty of growth stocks, but financials, there's energy, which didn't have the greatest week, but has been doing well. So a lot of sectors, and investors should note that the market is not running on all cylinders, but at least on most of them, I guess.
And just a recap refresh, maybe for people who are newer, we changed the market direction last week on Thursday, October 14th, where we saw the S&P 500 getting back above its 50-day line. So strong day in the market that day. We saw a lot of actionable opportunities, not only that day, but leading growth stocks really acting well even earlier in the week. So that was the signal on that day, Ed, to start adding more exposure. And so this week we've seen sort of the fruits of that. If you took that signal, hopefully you are now sitting on some nice gains for some of your positions.
Yeah, absolutely. That was it's been a nice stretch here to add exposure.
Okay, now let's take a look at a couple of other charts to give us perspective on what went down in the market this week. So let's take a look at the Dow. Now at highs here, we also have IWM, the ETF that tracks the Russell 2000. We'll flip on over to a weekly chart here. So even though on the daily, the action doesn't really stand out a whole lot, just because I think it's been consolidating for so long, we did see a gain of about 1% for small caps this week. And let's also take a look at growth through the IBD 50 ETF FFTY, down about 1.2% on Friday, but for the week, still managed to gain 1.9%. So your perspective on some of those undercurrents that we're seeing in the market right now.
Yeah, I mean, with the small caps, the only downside is that it would be nice to see more momentum, just because, more breadth. There's breadth of leadership, but I'd still like to see more strength in the small caps, just as a sign of breadth of overall strength, more stocks above their 50-day line and 200-day lines, and the Russell obviously is above those levels. So that's nice. It's FFTY, actually pretty good action given that Intel and Snap had really nasty sellouts. I mean, Intel's obviously a laggard, but Snap has been a strong thing. And Snap, it was in the 50. It probably is. I don't know if it's going to still be in it, but it took its toll today. And there's other stocks in there that got hit. And yet still it was only down 1% today or so and up for the week. So that shows you that there was a lot of strength. This was not a little bit resilient. This market did not panic on what news that could have been pretty darn bad. And it held up pretty well.
And we'll have to see what next week brings in the way of earnings, how results stack up to expectations, and some color from management on the outlooks. So we'll get to more of that, but let's look at 0TNX, which tracks the 10-year Treasury yield, and just a strong move continuing that we've seen ever since late September. So for the week, it looks like we saw another 5% boost here.
Yeah, that's pretty getting up there. We're at 5-month highs. And look, the market went into a correction in part because the yields were rising. That was really hitting growth stocks. But it's amazing how, again, resilient you would have expected with some of the earnings warnings. And yes, there was plenty of good earnings news, but with these yields up, you could have certainly talked yourself into a really bad week. I mean, if we'd had one, it would have been, well, of course, it's understandable. So the fact that we had such a strong week with yields going up, that's a very positive sign.
Okay, and now a look at some of the group action this week. So IGV, the tech software ETF, breaking out this week with a gain of about 2.2%. So outperforming the overall market. You have Microsoft in there, but a lot of the leading tech stocks. And what about chips this week? So you mentioned Intel, but what is Intel's pain? I guess is a gain for others. So SMH up 1.7% this week. Metals and mining names down a bit this week, about 0.7%. Financials, we'll take a look at XLF. Had a nice week of outperformance here, Ed, up 2.8%.
Well, there we expect that's not too much of a surprise with the bond yields rising like that. So that's going well. And if you think that maybe the economy, maybe the worst is soon to be over on supply chains, I mean, maybe, you know me, I'm a natural optimist, but maybe supply chains are, they're still troubled, but maybe that can improve. So you can see the economy moving higher. Those are just positive tailwinds for financials, and a lot of them did really well. And you're frozen on my end, so I'm just going to keep talking a little bit like we saw. Yeah.
Can you hear me now?
Now I can hear you now. I'm sorry. Yes, go ahead.
No, you're good. Let's now take a look at XLE. So energy, this is a group that we've seen really come on since that late September period, continuing higher this week.
Yeah, I mean, some of them are consolidating, some nudged higher. Wouldn't be wrong if they could pause a little bit, even have, some of them need a down week, some of them had it, a down week or two, and then maybe they could keep going. But this looks strong, and definitely want to be paying attention to this sector.
Okay, IYT, we're going to continue. Transportation up 2.6% this week.
It's good to look at this because I was rattling off some things talking about, but trucking firms are doing well. Rail stocks broke out today. Yeah, not everything's going, but there's a lot of strength here as well. So you just got to keep looking at a lot of opportunities. It's not just high flying IPOs and growth stocks.
We're still not done. Let's also check in on XLY, consumer discretionary, something we touched on IBD Live this morning, up 2% this week.
Yeah, consumers are actually doing pretty well. I think Tesla might be in this. That probably isn't hurting this index. And there's a lot of consumer stocks that are doing quite well. So again, just pay attention to all these. These are all healthy signs showing the breadth of leadership.
Yes, and last but not least, healthcare, XLV, a strong week for healthcare stocks, up 2.9%. So now let's take a look at GOOGL with its earnings report due next week. You mentioned Snap. So Google got hit by Snap today, down 3%, above average volume. So we have earnings on the 26th. Shaping up in a base here. So this is one for the radar for a potential move on earnings. But what about those who bought recently?
Yeah, I think they've got a real decision to make. I mean, this is going to be coming up, and you can try to see hold on if it comes back a little bit and sell, but it's like probably you're down. If you bought like off that trend line that you have drawn there as it came above the 50-day line, well, you're down. I mean, and you don't know. And yes, maybe the snap news will be is pricing in some of the negative news, but it can get worse because Facebook has talked about similar issues and it fell 5 or 6% today. So it wasn't like that was priced in. So you can't be sure of that. This has had a strong run. I'm noticing here a lot of pink bars. There are some volume bars again. I don't want to go too extreme. Some of that was in the correction, and they're, it's so, but there's some pink bars showing some distribution here. Obviously, it's had a great run. Earnings and sales growth have been accelerating. That's probably going to come to an end as comparisons get tougher. But if you're a newer investor, you may want to just sit it to the sideline. And if you have to buy it back later, that's not the worst thing because then the risk is off. I mean, it's just a similar situation. So if it gets back above this week's high, that would seem like a decent buy signal at that point, but it's got a ways to go to get there.
It does. Finished the day about 2% below the 50-day line, and on a weekly chart, looks like it was about 2.1% below the 10-week line as it tries to hold within this flat base structure, but it all comes down to that reaction. So we have many reports that we are keeping tabs.
Well, Ali, I'm having trouble hearing you once again. And so, but this is Upwork, UPWK. They're sort of in staffing, but it's an online platform, which, nowadays you can hire people just about anywhere, especially in the tech field. This one also has earnings next week, accelerating revenue growth. It's recently turning profitable. After today, later today, we'll probably get a handle showing up. So this will have a handle buy point. This one had a really nasty sell-off about 3.5 months ago. It looked like it broke out nicely and then it really sold off hard. It's coming back, but you have to be aware. This is obviously a stock that can have some bad moves. I mean, doesn't mean it will. It might have a great reaction to earnings, but this is why we talk about, while you could buy an option maybe and get into this play, buying ahead of earnings would seem like a really high risk situation.
That's exactly right. And let's also take a look at CLF. This one just reported earnings and closed the day with a gain of 12.7%. We highlighted this one this morning on IBD Live. So taking a look at the 5-minute chart here, it was really off to the races in the morning, pulled back a little bit, but then regained its momentum throughout the second half of the session, Ed.
Yeah, really tremendous. And it really different from some rivals, which did okay this week. But they have some real strong synergies from a couple of mergers. Their growth has just exploded because of those mergers and obviously that. And they have a lot of fixed price contracts. So some of the things that have been hitting steel stocks is like, well, maybe steel prices are heading lower, but they have prices that are going to keep their earnings strong into 2022 when others may not. So that really delivered here. And it's always nice to have that risk off the table. This flashed a pretty clear early entry, and we'll have to see if it can continue higher or pause here, maybe forming a little handle kind of situation, but strong action in this steel stock.
Yes. And now let's talk about the investing action plan for the week ahead, which we did talk about a little bit earlier today when we were both on Barron's Live, but the tips heading into next week, it's a big week.
Yeah, peak earnings week and all the companies and almost everybody's reporting, it seems like, definitely first, look and see what you have in your holdings. So when do you have earnings for some of these companies? If you have Microsoft and Google, Upwork, et cetera, do you have a big enough cushion? And that cushion, we usually talk about 5-10%, but it can depend on your conviction in the stock, the size of the position, the character of the stock. Like an Upwork, you might want a bigger cushion in, say, than a Microsoft. I mean, but you never know. And also know what stocks are related to it. Like if you owned an Apple chip stock that doesn't have earnings next week, well, you still want to pay attention to Apple earnings. We saw with Snap how all these other stocks, like even a gigantic company like Google, falling pretty hard on Snap's warning. So you want to know what rivals and suppliers and customers to your stocks are doing.
Yeah, stay on your toes. Don't hold a stock into earnings if you are down on the position, especially significantly. We want to be managing our risk, but keep an eye out for new trade ideas, stocks that are setting up. Maybe we see strong reactions, but we'll be analyzing the intraday charts if and when we do see those actionable opportunities to see what clues we can find in those intraday charts, because it's not just about where a stock opens, Ed, it's about where it closes.
Yeah, definitely want to take a pause and wait for the first few minutes before you make big buy and sell conditions. But luckily on IBD Live, we're going to have some real high-powered help next week to help us and everyone else navigate the week.
Yes, we are. So Wednesday morning, we will have Mark Minervini joining the program. So looking forward to getting his thoughts. And of course, every Tuesday, we have David Ryan on the show. So with all the reports that we're going to get all week long, between the reactions and the setups that we're seeing, it'll be great to get thoughts from those two market wizards. So for all the details, make sure you check out investors.com/IBD Live. We'll see you there next week, everyone. Have a great weekend.